Connor and Gary, while we wait for our other community members to join in, I think for that time we could just start with some introductions. And Connor, why don't you introduce yourself and also your company?
Yeah, sounds great. Aman, thank you for having me. I've been a big fan of Wi-Fi Map and what you are building for probably about 6 months now. But yeah, my name's Connor Lovely. I work in BD at IoTex. In the past, I worked in strategy consulting for Boston Consulting Group, and then jumped deep down the crypto rabbit hole in 2020. Actually, got into this space first through Helium, not through like Bitcoin or Ethereum or NFTs or any of the other more common ways to get into crypto. But yeah, I got into crypto through the kind of deep in space. So this has been home to me since 2020. I did a lot of Helium hotspot mining back in the day. So I learned a lot about the Helium tokenomics and how to optimize earnings and how to build out the IoT side of the wireless network. And then after that experience, I worked at Hexagon Wireless, which is a basically DY DPIN deployer, venture miner of a lot of these different DPIN projects. So we were deploying Helium equipment, XNet equipment, basically building out a lot of these decentralized wireless networks and earning tokens from them. I was there for about a year. It was a great experience. I learned a ton about all the new DPIN projects coming up and how to help them build out their networks, what they really needed. And then I've taken a lot of those insights, especially from like the miner perspective of these networks, taking those insights over to IoTex. So IoTex is a leading DPIN infrastructure company. So we're basically building blockchain infrastructure to connect the real world with blockchain. So smart devices, mobile phones with mobile apps, like Wi-Fi map, any of these devices in the real world are generating data, and a lot of them are obviously used in DeepIn projects, and we're helping to get DeepIn companies and real world asset companies help them get their devices and data on chain, essentially. So yeah, excited for this chat, and thank you for having me.
Wonderful. Thanks for the introduction. I think with your experience, it could be good to have another discussion, maybe on a Twitter space in the next couple of weeks around Deepin, and dive deeper into that and how that is going to have an impact on the world.
Yeah, absolutely.
Gary, everybody knows you since you've been here on the space a couple of times, but still would be good to know how you got into crypto and what was your story back then.
Sure. Hey, Connor, what's going on? Aman? Yeah. So actually, I started off day trading in 1998 when I was like 19 years old, and I was lucky enough to get chosen to be in the top proprietary shop, one of the top proprietary shops on Wall Street, back in New York. So I come from a trading background. In around 2007, 2008, I opened up my first stock hedge fund. It was a long short. And around 2013, I took a little bit of a hiatus, just kind of retired, hung out in Europe for a bit. And in 2017, 18, I got really interested into crypto, mainly because I didn't understand the difference between Ethereum and Bitcoin. I kind of saw crypto all in one basket as a payment solution. And when I was calling up some of my New York contacts, the bankers side, they also had no idea the differences between blockchains and stuff like that. So actually, I reached out to a buddy of mine who was out in California as a VC out in San Francisco, and he had invested in a few altcoin crypto companies, and one of them was a hedge fund, where I connected with them. And in 2019, I joined their team as a consultant to the CEO, and I really got the ability to learn from a bunch of 20-year-old kids who were amazing, who really understood the crypto space better than anybody I met to that time. And since that point, I've been really enamored with trading and also investing into crypto as well as building stuff on the crypto blockchain. In 2020, we started our own crypto hedge fund NVC unit, and that's how kind of I got here. That's when I met up with Dennis, the CEO of Wi-Fi Map. We saw a great opportunity. Like I mentioned before, they were decentralized, so they're already kind of in the Web 3.0 space. And we said, this is the right move. And we can not only benefit the community but also the ecosystem as well by joining the Web3 community.
Wow, very interesting. Wonderful. So, uh, coming to the topic that we want to discuss today, just a couple of days ago, PayPal came out of nowhere and announced the launch of its USD backed stablecoin. And as we know, PayPal is huge. It has, I think, over 426 million users worldwide. And this was a big news for everybody here in the digital asset space, in the crypto space, and everyone has a lot of questions around what it means for the digital assets users, what it means for the crypto landscape, what about the other players in the space. So let's start it from the first question. What do you guys think it means for the crypto landscape, and what do you just have the initial views about it? Connor, we can start with you.
Yeah, no, it sounds good. Yeah, I think it could be very big. I mean, it's obviously good to have a large established regulatory or regulated like fintech player seeing some value in doing things in a more decentralized way or having some finance take place on chain. I think there still remains to be seen like the level of adoption for PYUSD and maybe the outcomes both on the regulatory side and on like the consumer uptake side. But I think generally it's definitely a good sign that they had some interest in the space and wanted to launch a product. I saw earlier today when I was prepping for this space a bit, crypto is currently between 300 and 400 million users in terms of global adoption. So PayPal being around 430 million could effectively double the number of crypto users if most or all of PayPal users adopted PYUSD and it became very common to hold that as a PayPal user and to use it. So obviously doubling the number of crypto users would be great. I mean, we all talk about real world adoption and trying to get there, but something like this that's very useful, very easily understandable to consumers, and introduced by a large established regulated player could be really, really good for the space.
Gary, what do you think? What are your initial thoughts on it?
Yeah, I'm actually very bullish on this because, well, like Hunter said, PayPal is a well-established name that people trust. It also has 400 plus million users worldwide. I think both of those are super important for especially stable coins, because stable coins, they don't necessarily need to be decentralized. And what we've seen from the decentralized player, the biggest guy is USDT. There's a lot of FUD constantly coming out. Even last weekend, there was a lot of people talking about USDT breaking the peg and move your assets to USDC. And then when Silicon Valley Bank was going under, we saw a lot of people fighting about USDC, and USDC went down to 90 cents versus the dollar, and everybody was moving. So having a regulated name that people trust is holding the dollars behind the token, I think is very important right now. And more importantly, it's another on ramp, right? It's another fiat on ramp. The more fiat on ramps that we can have in crypto, that's been, at least for Americans, that's been a very, very like tough thing, right? We've had Coinbase, we've had Gemini, um, but the more fiat on ramps that we have, the better it is for the space, and the more bigger names that get involved, it just takes away kind of that scamminess from other projects, or the overall feeling of the scamminess, and people start trusting the space better, which is always a good thing.
Yes, absolutely. I think a lot of other PayPal users who would have not, you know, thought about getting into crypto when they will see PYUSD as an option there, and probably if they're sending money abroad for remittance and they find it as a cheaper option, they could simply, want to try it just to save money first, and then, get into the crypto space more and more. And as you both mentioned, PayPal being one of the leading fintech companies in the world, do you think this is the time that other companies in the fintech space, other similar players like PayPal, would also want to, kick off a crypto project or have a crypto stablecoin there, and launch many other stablecoins in the coming months or the next year?
Yeah, I think I think it's good for us in the crypto space that PayPal is launching this USD stablecoin, but we also have to remember that they're obviously working in the best interest of their own company. So I think probably the main reason that they're launching this stablecoin now, I mean, I'm sure they've been looking at it for doing something like this for years potentially. I think the higher interest rate environment is really what is motivating them to launch the stablecoin now. I mean, maybe they've done some lobbying or kind of backroom talks in DC or with global regulatory players, and they feel a bit more comfortable now for some reason. But I think just the kind of business model of stablecoins where a consumer or like a business would deposit $1,000 with PayPal, and then PayPal would take that $1,000 and buy short-term treasuries and other very liquid, hopefully non-volatile assets, like, and then issue PYUSD to that person that gave them the $1,000. Like, what might not be immediately apparent in that whole transaction is that PayPal will very likely be earning, all of the interest from that stablecoin issuance and minting. And so they're now that rates are 5, 6, 7% instead of whatever they used to be 0.05%. I'm sure PayPal sees a pretty big opportunity for themselves to basically make free money or close to free money in terms of the interest on stablecoin deposits.
Yeah, definitely. I feel so as well. With the increased interest rates, it's going to be so simple for them for just to keep USD, get on the interest on that, and that's a good business model. Gary, do you think that other companies which have similar business model to PayPal would simply copy this entire stablecoin thing and also have more stablecoins, or say maybe banks coming with their own branded stablecoins, just so that more and more people could keep their money with them?
So 100% to what Connor said. The reason why the other stablecoins had such issues is because interest rates were low, right? So when interest rates are low, you still have to make money, and you have to get into riskier assets, right? And you have to get into longer duration assets. And duration risk for something that is as liquid as USDT, meaning that people can convert it back to dollars on an off ramp, is a dangerous proposition. We saw that Silicon Valley Bank, exactly. That's the main reason that they went under. They had duration issues. It wasn't that they were scamming people or using the money or lying. It was just that it had to invest in longer term interest rates to make enough money to make money as a company to be profitable. And when people ran for the bank because they needed money, what ended up happening is they couldn't convert those lower interest rate bonds that they were holding at par value, right? So they were taking 20 to 30% haircuts on those bonds since rates skyrocketed, and they just had the missing funds. I think now with a higher interest rate environment, definitely more companies are going to get into it. I'm not quite sure if the banks, because the banks make money like this regardless. People give them deposits. Plus, if you have an option in giving them a deposit and earning an interest rate versus just giving a deposit and not earning an interest rate, most people will choose the former. What I do see is credit card companies getting into it, right? Because the other flip side of it is PayPal, because they're making a free 5%, they can now be much more competitive on the credit card side or the merchant processing side, especially for cross-border transactions. That's where you're really going to see a huge impact in the cost to the average person going down. So now PayPal is going to be more competitive than other credit card companies. So I feel like now credit card companies have to come in and do the same. So the MasterCards, the Visas, the American Express, I believe they're all going to issue their own stablecoin. And I think that's all positive for the space. The more names that we have involved, the more competition, the better it is for us as the holders of these stablecoins.
Yeah, absolutely. I think it's going to be a really interesting time for the crypto space overall, as we see bigger traditional, fintech companies coming into the crypto stablecoin space. And what do you guys think about the regulatory challenges and opportunities in the stablecoin space?
Yeah, I'm definitely not an expert on the regulatory side. So Gary, if you have anything interesting to say, go ahead, and I'm sure I can have a few points to discuss. But yeah, didn't I don't know a ton about the current state of stablecoin regulation, in the U.S. or globally.
Sure, Connor, no problem. I'm also not an expert, but I have a little bit of reading knowledge. And for what I'm seeing is they're definitely going to probe it. They're definitely going to look into it. But from people that I spoke to and stuff that I've read online, it doesn't look like stablecoins actually breaks any federal laws in the US at least. As long as they're regulated as a bank or as a stablecoin, whichever way they look at it in the future, I think it's going to be fine. I also think that the US doesn't mind having stablecoins out there from a centralized figure, especially an American centralized figure. Right now, the stable coins, basically all of crypto trades mostly against USDT or stable coins. So the fact that they can regulate kind of the largest trading pair in the world, I think is a benefit to the US government, at least the way they look at it. And I think they were not going to have too many problems with it, even though I'm sure they're going to probe it. They're already talking about it. They're already kind of asking questions from PayPal. But I think in the long term, as long as it stays a stable coin, and they regulate it and they monitor the people who come on chain and bring cash. So it's not like so they know their customer basically. They can't do the KYC. I think it's going to be totally fine in the long term, especially as a stable coin.
Yeah, I think that all makes a lot of sense. Like, I think I saw someone had tweeted the other day, or I guess posted the other day, that I guess while the regulatory climate in the U.S. towards stablecoins isn't like 100% clear. I mean, I think it would be better if it was 100% clear. But yeah, Gary, I agree. I don't think that stablecoins, face anything near the amount of pressure that like some of the tokens that are being considered to be securities are. Like, it's just a kind of a fundamentally different use case for tokens and blockchain technology. But yeah, I think it will be very interesting to see how the government reacts to the PYUSD launch and how consumers react. Because I think generally, like, the US should want to allow their big fintech players to get into this space, and to hopefully extend dollar dominance for as long as possible. I mean, I think there's been a lot of talk in the news lately about various countries starting to trade commodities in their own currencies, the renminbi, or like Russian currencies even. And so I think trying to extend dollar dominance for as long as the U.S. can, and doing that through its big fintech players would definitely be good, for the U.S. or for any country that's looking to adopt stable coins.
Yeah, I still remember the time when Facebook announced about Libra, and I think without even any delay, the government simply asked them to, shut down the project, and there was no launch, and then nobody talked about Libra after a certain point of time. But in this case, it's been a few days, and we haven't seen any such announcements or any strong comments coming from the government side till now. And it could possibly be also because it's backed by US dollars, right? And I don't remember clearly, but I remember a bit that Libra said the Libra crypto would be backed by a basket of different currencies. So I think US must be pretty happy, or not happy, but satisfied that at least the stablecoin is backed by just the US dollar. So could be that as well.
Yeah, and I would definitely think that PayPal probably wouldn't launch this stable coin and make all the hype and fanfare about it, and spin up product teams internally, unless they were pretty confident that uh, governments around the world, especially the U.S., kind of where they're first launching, were okay with it, or at least like hadn't said in backroom talks, we're very not okay with this. And maybe, like, I think the Meta Libra example was a good one. Um, because you could say, well, we would have thought the same thing for Meta as well, but they're obviously more of like a tech tech first company, much less of like a fintech company, if at all. Whereas PayPal, I would think, would be very plugged in DC and have lobbyists and have good relationships with lawmakers. So in for a financial product like a stable coin, I would think that PayPal had done the necessary homework to feel comfortable about launching it.
I'd like to also add that we're in a different part of the time frame in crypto, right? Crypto is much more mature now than it was when most people didn't even understand what Libra was trying to do, right? The average person. I think now, if you say stable coin, most people understand it. Also, PayPal is already a payment transaction company. Facebook wasn't, right? So Facebook didn't have the banking licenses, all of this regulatory stuff that comes with being a payment merchant processor and bank custodian and stuff like that. So I think it's just an easier play for PayPal here. I think they've also obviously spoken to people on in Washington to figure out where the potential points can be of problems, and I think they're pretty much figured out that they've solved it. That's my opinion. That's what I'd like to add.
Yes, yes, agreed. That was a different time, and now everybody understands crypto a lot more, and especially in the stablecoin space. And as you also mentioned that PayPal also has a lot of licenses in sending money, receiving money, payment space, probably around remittance as well. So this could be entirely different for crypto and for people and for what any previous crypto or stablecoin has done. And because probably a lot of people were earlier scared of remitting money through a stablecoin or through a crypto stablecoin, but now it could be easier, as well as it could be under certain licenses or something, which makes it safer for some kind of people. But coming on to its impact on creating awareness for cryptocurrencies and just overall other crypto apart from the stablecoin usage, do you think that a stablecoin generally is a bridge between traditional finance and the crypto world, and now it's going to fill that gap even faster with PayPal stablecoin coming in?
Yeah, I definitely think so. For a couple of reasons. I mean, I think one of the I feel like fastest ways to get someone to learn about something is if they, for example, like hold an asset or they're gifted an asset and that asset has value. Then they're much more likely to naturally kind of become curious. Like, what is this thing that's in my wallet? What is this thing I'm holding? And oh, I have $100 or $1,000 worth of it. Like, that's interesting. Like, what does that mean? Why doesn't it just say USD? So I think it could represent like a jumping off point for a lot of people that don't know about crypto to take a very kind of shallow dive into the crypto world and understand what the asset is that this new asset is that they're holding. Um, and then it's also kind of the perfect uh, jumping off point for people that don't know much about crypto, because it's pretty easy to understand relative to a lot of other parts of crypto. So like the PYUSD stablecoin is obviously pegged to the dollar, has a kind of 1-to-1 exchange rate. So it's very easy to understand, like 1 PYUSD is going to equal $1 or $1 worth of value. There's no like satoshis or other you know other ways to split up that token, and there's not like 1 Bitcoin equals x thousands of dollars on that day. So yeah, much easier to understand, I think, as a first crypto asset to have, and also just obviously a very useful crypto asset to initially have. Like a stable coin versus an NFT, I think you can do a lot more with a stable coin in terms of having it be kind of like an on and off ramp between TradFi and DeFi, and doing various things with it, whether it's depositing it into a liquidity pool on Uniswap or uh, borrowing against it, lending it, etc.
Yeah, I agree with a lot what Connor said. I think most importantly, crypto has an image problem. With the FTXs of the world and the Lunas of the world, every time kind of crypto takes two steps forward, it takes one step back with this kind of scammy feel, right? Who are these players? PayPal is a name that most people recognize, at least in the US. It's regulated, so people feel comfortable. So I think the more you have traditional players that people kind of trust come into the space, it not only gives credibility to the stable coins, but it gives credibility to the space in general, the crypto space in general. Having another on ramp, like I mentioned earlier, is very important for USD. It allows another way for people to get involved in crypto. And like Connor said, they can move it over to a DEX and buy tokens that they do research on and like. That's very important. So it gives another 400 million users the potential to do that right off the bat. I don't know the size of Coinbase's user base, but I would assume it's much smaller. It also allows for people to understand crypto, right? So this is like Connor said, very, very simple. It's 1-to-1 to the dollar. There's really nothing here to really understand, but you do understand the mechanisms of the blockchain, right? Because you can transfer it to somebody with an offline wallet, online wallet. You could do it very quickly, very efficiently, and very cheap. And I think people will start realizing that the technology itself is leaps and bounds better than what we have currently in the banking system, right? And you're in control of it. And it's also easier to use, right? So instead of traveling with $1,000, you can leave it with a relative in the US or a friend in the US. And as you need it, they could transfer it over. So if you're going to a place where you don't feel comfortable having $1,000 in your pocket, instead of going to the ATM and taking out cash at a high transaction rate, if people accept it and wherever you're going, you can just have it being transferred as you need it. So there's a lot of cool stuff that you can do with it. This is just kind of the beginning of it. But as more and more people realize the flexibility of having crypto, I think it's a positive for the whole crypto space.
Absolutely. Agreed. It makes things pretty easy for anybody who's just starting up. Uh, so we did talk about some of the cool things it could do, but let's also talk about risks. Do you think it brings or it has any risks as well for using PayPal stablecoin? I've been seeing on the internet that a lot of crypto people who are already in crypto, even though they realize it is a good way to educate non-crypto users, but a lot of people are saying they may not use uh, the PayPal stablecoin because somebody also pointed out that in their code it mentions that PayPal could simply freeze and unfreeze account and even wipe a frozen account with its entire balance if there's a need. Do you think that that is also some kind of a risk and crypto people may not use it and it's more for the non-crypto people?
Yeah, I did see that tweet as well. I mean, I don't think I have enough of a technical background to really like look at their code and be positive that that's the case. But it seems that that level of centralization in terms of being able to freeze and unfreeze accounts and maybe even potentially wipe them. I'm almost positive that USDC has a similar ability. Maybe not to wipe accounts, but to freeze and unfreeze them. So I think it's very important to think about PYUSD in the context of other centralized stablecoins. And I mean, it'd be super interesting if someone had like a chart where you could compare, PYUSD and USDC and some others across all the various kind of metrics. But it seems like they launched it in a very similar way or structured it in a very similar way to USDC. So I mean, I think the benefits we've talked about a good bit already. One interesting point to note that I don't think we've covered yet is I almost had to. I mean, I double checked these numbers a couple of times just to be sure, but in 2022, on-chain stablecoins did $7 trillion in volume, whereas PayPal only did $1.36 trillion in volume in 2022. So I thought that was pretty interesting because I would have assumed it would have been the reverse, but I think that just goes to show how much more liquid and open and maybe even potentially useful stable coins are as opposed to fiat that has to settle in banks and take 3 to 5 days each way and etc. So yeah, there's obviously a lot of benefits, but in terms of risks, I think it like I said, it seems like the risks of PYUSD are pretty similar to the risks of USDC or other centralized stablecoins. And then there's always the business risk of PayPal somehow not knowing how to properly back PYUSD. If they were buying very long dated treasuries, for instance, like a lot of the banks were doing, and then interest rates rise even further, and those long dated treasuries are worth less, and they have to take a haircut. That would obviously not be good, but I would assume that PayPal has, both the expertise in house to back these stablecoins correctly, and also has learned from the recent failures of some banks, when doing something very similar.
Yeah, well said. Going back to the positives, we mentioned it. So I'll talk about a little bit about the negative. To meet the regulatory framework, it must be centralized, right? And centralized means answers to the U.S. government if you're a U.S. company. So if the U.S. tells you to freeze an account, the same way they could freeze your regular PayPal account, they'll be able to freeze your cryptocurrency. If they don't put that kind of block in place or that functionality, I'm not sure if the U.S. government would pass the stablecoin, right? Because the U.S. government wants everything to be regulated and everything to be centralized. Once you're centralized, you can answer to the government, right? So the government can know who's putting in funds. They could freeze those funds if there's somebody who's acting poorly. For crypto native people who love the decentralized aspect of crypto, it's probably not the answer. But I think for the majority of the world users, they're more comfortable with a centralized kind of figure in charge of their money. Now, there are risks with a centralized figure, like Connor mentioned. PayPal could go bust. PayPal might misuse the funds, whatever it is, right? So it's important that they're regulated well and closely by the U.S. government. I think the biggest negative we're going to see from this is that decentralization over the next decade is going to go away, right? We're going to realize that more and more people feel comfortable with the centralized model. The U.S. government and other governments are much more comfortable with a centralized model. So, kind of the main risk that I see in the long term is that the decentralization of crypto will slowly be go away, go away, go away, and we're seeing that a little bit with some of the decentralized exchanges being, attacked now by regulators and stuff like that. I don't know if it's good or bad. I like having the option of decentralization in the crypto space. In 10 years, we might not have that ability anymore.
Well, thanks for both the answers. I think both are pretty relevant. And I just have one last question for today, and you can also give your closing remarks with that answer. Is while we were discussing this, I just thought that do you think if banks or credit card companies also come up with their own branded stablecoins, do you think it will make the concept of a central bank digital currency, the CBDCs that everybody has been talking about, almost irrelevant?
I think I would hope so. I mean, depending on the country that we're talking about, like if a private company in that country, like in the US, like PayPal, for instance, like launches this stable coin. I mean, Gary said they kind of answer to the US government at the end of the day, which is very true. Whereas in a country that's a bit more locked down, like maybe China, there's probably like direct access and backdoors, um, as we've seen with a lot of like large private Chinese companies where they answer to the government like wholly or fully. And so maybe I guess what I'm saying is maybe the launch of privately launched stablecoins like PYUSD, maybe they do kind of replace CBDCs, which I think would be preferable, but there's also a decent chance that even privately launched stablecoins like this, depending on the country they're launched in, could essentially function as the CBDC of that country if they're centralized enough and the government has enough control and data access on the back end. So something to watch out for and be careful of, I think, as a consumer. But at the end of the day, it's obviously very difficult to to fight against your government if you want to stay in a cash society or you want to have privacy with your financial transactions. Like there's obviously ways to do it, but it will become more and more difficult over time as the market matures and more private companies like PayPal launch stablecoins. That's it from me. Thank you all very much for having me. This is a great, interesting discussion.
Yeah, Connor. Glad to have you on. Um, so kind of like what I mentioned earlier, that we're going more and more centralized. That's my fear. So obviously, the most centralization is central bank digital currency. I think we get there, right? Because why would the Fed want PayPal to have control when they can have control themselves? Now, if they overreach, right, there's some rumors that once we have those, there's going to be some overreach. Like they'll make sure that you can't spend money in certain places. So let's say right now, Russia's on a sanction list. If you go to Russia, you can't use, the USD central currency. Um, Cryptocurrency in the future. So I think there's always going to be kind of this second market for private companies that will allow it. But I think the majority of users probably, unfortunately, will be using central bank digital currencies in the next 10 years.
Perfect. Thank you so much, Gary and Connor, for joining today. And thanks for the interesting discussion that we have had. We will be, sharing this on other channels as well. And hopefully, everybody who's joined in has also had a great time here. And everybody who will be listening in the future would also enjoy this discussion. Thank you, Gary and Connor. Speak to you soon.
Thank you, guys. See ya.
Bye. Thanks.